Hey everybody, Derek Christensen here. I'm the owner of Legion Law, a premier estate planning and probate firm in Dallas, Texas. Today I wanted to talk to you and kind of continue some other videos I've been doing about how to reduce your estate tax amount by gifting away things. But before I dive into that, I wanted to let you know how to reach out to me. You can email me directly, Derek, D-E-R-E-K, at legionlawpllc.com, or you can find me on my website, www.legionlawpllc.com. So with that, let's dive right in. So the estate tax is a concern for wealthy people. And in fact, it's going to be even more of a concern here in a little bit, because in 2026, the Trump tax cuts are going to expire. And if they do expire, if Congress doesn't renew them or continue them, then there will be a dramatic reduction in the estate tax exemption amount. And a lot more people are going to be subject to paying that tax. So what is the estate tax, and does it apply to you? Well, the estate tax is set by Congress, and they're going to set an exemption amount. And this is what I talked about in my other videos as well. You're welcome to check them out. But the estate tax is set at a certain dollar amount, and if you're below it, you don't have to pay it. And if you're above it, you do. So, and the estate tax is about 40% of every dollar that's above that exemption amount. Currently, it's $12 million for an individual, $24 million for a couple. However, it's going to get halved to 6 and 12 in 2026, like I just mentioned. So if you are around $6 million, I'd start sweating bullets a little bit, because if Congress doesn't get their act together, which they oftentimes don't, there may be tax consequences for you and your estate later on. However, one of the most solid, best ways that you can just simply not pay the estate tax is by gifting. And what do I mean by that? It means that you just give away your stuff, quite literally. Now, I know you probably don't want to do that. I know you're probably thinking, it's my stuff, I want to spend it however I want. And more power to you if you do spend it all. But oftentimes, people who have that much money do not spend all of it by the time they pass away. So if you think that you are not going to be able to spend all your money before then, and you are worried that you're going to be above those exemption amounts by the time you pass away, then what you can do is gift. And what I mean by that is that you can take your stuff and physically actually give it to somebody else. The IRS allows you to gift. It does not charge you taxes until you reach above the gift amount. Gift tax exemption is what it's called. So just like the estate tax, the gift tax says, hey, if you're above this amount, you have to pay X percentage. Usually it's 20 to 40%, depending on how much you gifted away. And you're going to have to pay that. You will have to pay it. You give away the asset and you'll have to pay taxes if you go above that exemption amount. So the exemption amount right now, and it adjusts year by year, I think by $1,000 increments, if the interest rate is right or something like that. But right now, as of 2023, it is $17,000 for individuals and it's $34,000 for couples, which means that if you are a couple, you can give away $34,000 to each person that you want per year and not have to report it, not have to talk to the IRS, you don't have to pay any taxes. It's fantastic. So if you had 10 people you wanted to give your stuff to, if you have 10 people that in your will you would have given them stuff anyways, why not just do it now and lower your exemption amount? Because as I give away $340,000 a year, that's $340,000 closer to the estate tax exemption amount I will get if I'm above it. So if I'm lowering my estate lower and lower and lower to the exemption amount of the estate tax, then I'm paying less in estate taxes, and that money is still going to the people I would have given that much money to anyways. So it's great because, again, you're lowering your estate amount, you're still giving the money exactly to the people that you want to give it to, and you're going to pay less in taxes at your passing. So that's fantastic. However, you have to make sure of two things. One, your gift has to be current. It has to be present. It has to be right now. It cannot be, hey, 5 years from now, I'll give you $10,000, so therefore my estate is now worth $10,000 less now. No, it has to be today kind of thing. And it also has to be unequivocal. You cannot put any limitations on it. So you cannot give $34,000 to your niece and say, all right, if you spend it on college, good, but if you spend it on alcohol and drugs, then I want that $34,000 back and you owe me. That doesn't count. That's not a gift. And the IRS is going to ignore that, and they'll say, all right, you still have $34,000 in your account or your estate, and I don't know, you figure that out with your niece, but we're still going to tax you that $34,000. We're going to tax you 40% of that $34,000 if it's above the estate tax exemption amount after you pass away. So make sure you do those two things. Those gifts have to be present and unequivocal. So if you're giving away cash, I would set up an account in that person's name and only in their name, and you give that cash directly to them by a wire transfer. If you're giving them a car, I would give them a car, and I would, value it at a certain amount and then give it to them or whatever. So a house, that's going to be a little bit more difficult because you're not going to find $34,000 worth of a house. However, another strategy you can do, if you go above that exemption amount, you don't have to pay those taxes. You actually have two options. You can pay the gift tax, or you can lower your estate tax exemption amount by that much. So in other words, you're still going to have to go to the IRS. You're still going to have to say, hey, I gave a $300,000, or let's say I gave away a $334,000 house to my niece. I could say, hey, 34,000 of that was a gift, and 300,000 of that, I'm going to lower my estate tax exemption amount from 12 million as a married couple to now 11.7 million. And you have to file a certain form. You have to get an accountant, make sure it's done correctly. And by doing that, you won't pay any gift taxes, but you might be paying estate taxes later on. So either way, it's a very strong strategy. Spend all the money you can and enjoy your life, and gift away as much as you can up to that exemption amount, and just do that over 20 years and you can lower your estate amount by a lot. And once you get below that threshold, then you don't have to worry about estate taxes. So it's a strong strategy. I recommend it for everybody who's in that area if they feel comfortable with that. Others say, nope, my money, I'm not giving it to anybody until I'm dead. So fair enough. But again, spending and gifting is a very strong strategy. So consider it. That being said, if you have any other questions on that and how to pay less taxes to Uncle Sam, feel free to email me directly, Derek, D-E-R-E-K, at legionlawpllc.com, or you can find me on my website where you can schedule a free phone consultation directly onto my calendar at our Contact Us page at www.legionlawpllc.com. So with that, thank you so much for watching and have a great day.